What the big news over the last 2-3 weeks, obviously, is uh, Russia coming out and saying that they're going to sell their gas for only rubles or gold. They will not accept dollars. They won't accept euros. And I mean, I equate this as the biggest news since 1973, when Kissinger came up with the idea of the petrodollar. In other words, the Saudis and the rest of the Arabs would only accept dollars for their oil, and that created uh, an unofficial support to the dollar, but it became official over the years because only dollars were accepted for the oil trade. Now, Russia is saying that they will only accept rubles. If you want their gas, you have to pay in rubles. And I'm sure that's going to expand to the rest of their commodity base, gas, wheat, oil, you name it. What they're doing is they were threatened to be kicked out of the SWIFT system, and then they were actually kicked out of the SWIFT system, and they've had a good deal of their reserves frozen. And you could replace the word frozen with stolen if you want. They also came out and they said that they were going to bid 5,000 rubles per gram. And when they came out with that, this was probably 2.5, 3 weeks, about a week and a half to 2 weeks ago. When they came out with that bid, the ruble had been crushed after the beginning of the operation. It went from about 80 rubles to the dollar to 140. And when they came out with that 1,000 rubles per gram, the math worked out to 1,450 US dollars per ounce. As of now, the ruble has strengthened almost every single day for the last couple of weeks. That bid now would be well over $2,000. It'd be 2,050, 2,100 in that neighborhood. However, yesterday they canceled. I shouldn't say they canceled. What they did is they said they're not going to do a fixed bid, but they will negotiate bids in rubles. They will pay for gold in rubles. So part of the story was they're going to be a seller of gold because they need capital, but that's not the case. They are a buyer of gold. So I'm viewing it as throwing a monkey wrench in the globalist plans for the Western reset, if you will. This is Putin saying he's not going along with it.
Now, can we go a little bit more into, you said you think this is some of the biggest financial news ever. You said the biggest since Kissinger with the petrodollar. Can we go a little bit more into that?
Well, yeah. I mean, the world that you've lived in your entire life has been with the dollar as the reserve currency. And it's interesting, the day that Russia came out and said that they would only accept rubles, that very same day, Jay Powell made the comment that he thought there could be more than one reserve currency. And when I heard that news, I'm like, that's insane that the chairman of the Federal Reserve would come out and say there could be something that competes with the dollar. So, like I said, I mean, that news, the news is huge. And if you look back at what's happened in the past, Muammar Gaddafi, Saddam Hussein, they both talked about a gold-backed dinar. And look what happened to them. They were killed, their countries, upended, and their gold stolen. But that's not going to happen with Putin. I mean, there's no way we're going into Moscow and stealing their gold. And there's no way we're going to depose Putin.
So where do you think it goes from here then?
Well, logically, I mean, what has happened is the dollar is no longer the one and only undisputed reserve currency. So we will see some type of monetary upheaval. I suspect in the not too distant future, probably within the next 3 to 6 months, there's going to be some type of currency upheaval. And I mean, you know the plans. They've already told you the plans are to go toward central bank digital currency. And the problem with that, and people need to understand how dangerous that is. Just look at what happened in Canada. If you sent $10 to support the truckers, you had your bank account frozen. And they actually had to manually do that. But under a central bank digital currency, if you say something wrong, who knows, if you go to the wrong websites, if you read the wrong information, they can just shut you off. It doesn't matter if you're a billionaire. If all your capital's in the system, they can basically just cancel you. And I think that is where that's where the plan to go for the West is. It gives total control.
Now, do you think that that there has to be a crisis in order to institute this on a mass scale? Because that's what I wonder. I mean, do they need a massive economic crash or real estate crash in order to have a solution, quote unquote, that is the central bank digital currencies? Or how do you think that rolls out?
It could never roll out unless there's a crisis. I mean, just listen to what the elites say. Don't ever let a good crisis go to waste. I mean, that's the only way to move the herd is to use fear, to use confusion. Otherwise, people will not accept it. I mean, how do you think they got so many who's done with fear?
Now, what do you think that this looks like when you're looking at the United States right now, offline? You were talking about the big move in the 10-year in the last, I think you said about 3 weeks or so, to about 2.7. And we're seeing mortgages up near 5%. I think about 50-60% drop in mortgage applications recently. What do you think happens next in, let's just call it the United States for starters?
Well, it will be absolutely will be worldwide. But understand that go back just 2 years ago at the height of the beginning of COVID, we had a 0.38% 10-year treasury. Now it's 2.7. When it got to 1.25, 1.4, maybe 4 months ago, that was basically forecasting or the markets front running the Fed. The Fed's always behind. The Fed's only raised rates 1/4 point, but to go from 0.38% to 2.7, I mean, that's what a quadrupling or quintupling or more of interest rates. And understand that the entire system is held up with debt. And the problem is when you raise rates on an over-indebted system, you do all kinds of damage. You do damage to the real economy. You do damage to the collateral. I mean, look at what's happened to bond prices over the last 6 months. And just in the last 2 or 3 weeks, it was just a couple of weeks ago that interest rates pierced 2%. Now they're at 2.7. I mean, we're just going straight upward with interest rates. And if you look back at history, if you look back at the 87 crash, 94, 98, 2000 with the dot-com bubble, 2007, 2008, every time the Fed tries to tighten and every time rates do go up, something breaks. And my point being, there's so much leverage in the system now that when something breaks, you're more than likely to see a rate of things breaking. I mean, this is going to destroy the real estate market. There's no ifs, ands, or buts about that, because mortgage rates have gone from 2.7 to over 5%. So if you qualified before for $1 million mortgage, now you only qualify for $550,000. But think about it from the other side. Think about it if you're an owner. Now you've got half as many potential buyers because less people qualify for a mortgage to buy the property that you're trying to sell. And then in a recession, you have people losing jobs and real estate hitting the market. How's that going to be brought up with interest rates where they are now?
Yeah, and not to mention, how many people are out of work and this and that. Now, how do you think all of this happening fits into the reset and where gold fits into it? Because one of the things that I found a little interesting watching all of this was just how much of it fit into this idea of pushing the dollar aside for some type of new global currency. Because when these sanctions happen, then Russia, who controls so much of the energy, is saying we want it in rubles. Then the response from the Biden administration has been, well, we need renewables. And they said the other day, 150 trillion printed over the next, I forget the exact year, with 20 years, 30 years. So you're talking about an incredible new level of money printing in addition to that. So on the surface, to someone like me, I'm just like, it seems like this is only going to destroy the dollar further from all of these sanctions and then Putin's response. So what happens next?
Well, you're right. It's like we're shooting ourselves in the foot. Inflation's already raging, and what they've come out and said is, well, no, money printing doesn't cause inflation, and deficit spending doesn't cause inflation, but it absolutely does. I mean, they're lying straight to your face. The dollar is not on the USDX. The USDX is comparing itself to euros, yen, other fiat currencies. But if you look at real goods, just look at the cost of real goods, that shows you that the dollar is being debased. And we're at a point now where we're at the point again where we were back in September of 2019. That's when the repo market broke. Interest rates went from under 1% to 10% overnight. And then conveniently, COVID came along, and the Fed was having to spend $50 to $100 billion per night to put into the repo market to keep that from blowing up. And here we are again. We're at the same point in time where, even more so, where inflation has heated up, and the Fed is saying that they're gonna start quantitative tightening. They can't do that. They're going to have to force more money into the system to keep the debt bubble from imploding. And forcing more money into the system, what does that do? That creates more inflation. So the Fed is truly stuck here because they do need to tighten. They do need to do something about inflation. But if they do what's right to tamp down inflation, to slow the economy down, to slow inflation down, if they do that, then they blow up the credit side of the equation. And everything runs on credit. All the financial foundations of the world are credit. Whereas 50 years ago or 100 years ago, all the foundations were hard money. The foundations were real goods, real collateral. And now it's credit, it's debt.
Okay, so now obviously they know what's happening. Do you think that they intend to keep tightening for a collapse, or is this them acting like they're going to do something before they reverse course and print more money?
In order to have a reset, they're going to have a crash ahead of time. So, I'm on the record as saying the things that have been done are just too stupid. I mean, nobody would do the things that have been done. It has to be the plan. I mean, I don't sit in on the board, on the board meetings, but it has to be the plan. And I think that's what they're going to do and the other thing is, I think there's got to be some type of false flag. I don't think it's just going to happen. I think they have to have something to point at and blame. They have to be able to say our plans would have worked if it wasn't for XYZ, whatever the false flag turns out to be. But the danger of a false flag now, in my opinion, is as high as it's ever been.
Is that a cyber attack? I mean, what is
Who
your
knows?
best in no?
Who knows?
Okay.
No idea.
Now, then once the credit market blows up, whenever this happens, then is that the first iteration of the reset? You know, you've talked about how there's 2 or 3 iterations. One is the globalist, you know, man-made reset, and then the next is ultimately, you know, more of a natural one. So the credit market blows up, and then they say, look, this whole thing's unfair. So we've got these CBDCs and we have this whole new system.
Right.
Is that what comes then?
I do believe that that's going to be the chronology, is that the man-made reset will use whatever chaos, confusion as an excuse. They'll point at you know, our plans would have worked, but okay, here's the alternative. This is what we're going to do. The problem is the man-made reset currency is still going to be fiat. As a matter of fact, currency is going to be even worse because they will have the ability to shut you off. And I don't think it will be. I don't think there's going to be confidence in whatever man-made system comes next, and that will lead to literally a Mother Nature type of collapse, and then Mother Nature will sort out value versus value versus value. Because when we talk about reset, we're talking about prices need to be reset, prices of all kinds of goods. And one of the prices that needs to be reset are interest rates. Now, interest rates are going up, but still at a 2.7% 10-year treasury, you know, you go back 100 years before, say, 2000, the last century, interest rates probably averaged 5%. And here we are at half of that. And there's more risk today than there's ever been. So there's no risk premium. The reset is going to affect everything. It's going to affect currency values, cross-currency values, stock prices, bond prices because of interest rates. Everything will be reset against each other.
One of the things that I've been watching quite a lot is, you know, these new lockdowns in Shanghai and the effect that can have on the supply chain, which of course is already quite depleted. Now, do you foresee food shortages, energy shortages, and general product shortages continuing in the face of these types of economic issues? Do you think we're in the early innings of that?
Well, yeah, obviously, if China's locking cities down, well, yeah, that's going to affect global trade without a doubt. What's happened is the supply chain has been so jacked with. They try to push too much through it. Then you get shortages. I mean, it's stop, start, stop, start. When you do that to a supply chain, you break it. And that's where we're headed, is toward a broken supply chain. And I've always said that I believe that it will be credit that breaks, and then there won't be any supply chains. I mean, think about it. How do any goods get produced? How do any goods get to the ultimate point of sale? How does anything get done without credit? Because everything runs on credit. So if they shock credit, and you're seeing credit get shocked with rates going straight up over the last 3 to 6 months.
Yeah, I didn't really think about that, right? Because if the whole global supply chain is based off of credit and the credit market blows up, that's when shit really hits the fan, I guess, huh?
Exactly. Yeah.
So where do we go?
Think about your daily life. Think about your daily life. Everything that you do, everything that you touch, there was credit involved in creating it. Turn on your light switch. There's credit. You know, your electric company uses credit. Eat a slice of bread, drink milk, put gas in your car. Anything and everything that you do requires credit to create. And that's the problem, is that there's been too much credit, and the vast majority of that credit is bad credit because it relies on someone else to perform. It's not just a credit deal between you and me. You're not going to do business with me if you know I'm doing business with someone else who's broke, because you're going to be worried about me paying you. And that's what happened. That's what happened in 2008 with the great financial crisis. But we're way down the road from there and have lived on life support ever since. I mean, the Fed all central banks have been easy since 2008. There's never been a point in time where they actually tightened credit conditions. And I'm telling you, they cannot tighten credit conditions. They say they're going to. They say that they've stopped QE, but their balance sheet is still increasing.
Now, let's talk a little bit about the ways that you are strategizing and preparing for this, and what your best advice is, especially now that things seem to really be picking up. They seem to be quickening a lot, I would say, the last, I don't know,
Absolutely.
since the start of the year.
I mean, at this point, you have to strategize and prepare strictly for yourself and whatever family members you think are going to end up with you. I mean, you need to prepare with food. I mean, you need to prepare with everything. You need to have the mindset that stores are going to be closed, and that even if they were open, there won't be any goods on the shelves. So what you need to do is you need to become as self-reliant as possible and think out over the next year, 2 years, 3 years. What are the things you know that you're going to need? You need to purchase those now while you can, because they're not going to be available.
Yeah, I've been following some accounts of people that live, Westerners that live in Shanghai during these lockdowns, and they've gotten so bad that people can't even get water because you're not allowed. They arrest you if you leave your house. But since 26 million people are all using the same apps to try to order food, the apps are shutting down, and so people are going 3-4 days. No food, no water. And when they're getting stuff, they're getting almost nothing.
Right. Well, I mean, that's where this is all headed.
Where do you think gold fits into this? Is it that credit market collapses, they try to move to this CBDC thing, and they always just keep a revaluation of gold in the back pocket when they need it? Or how do you think it all fits in here?
Well, there's two ways to look at this. One, the central banks have gold, so a revalue higher gives them more collateral. From an individual standpoint, basically, the reason you own gold is to get your capital out of the system, so it's not sitting in a bank or a broker that goes bankrupt. They close, and at the same time, the dollar is collapsing in purchasing power. Owning gold gets your capital out of the system, and it will allow you to go through reset number 1, reset number 2. It allows you to go from where we are now into whatever the new system will be in 5 or 10 years. You arrive into the new system with wealth. Gold has been wealth for 5,000 years. It's the most liquid asset anywhere in the world. I mean, you could sell gold in any country, anywhere in the world. And the idea behind owning gold is to be able to carry your wealth from here forward to whatever the next system is. You'll arrive with wealth. Silver, the same thing. However, you may end up having to use some of your silver to survive. It gets you from here to there because you'll be able to barter. You can buy things. You can go. A farmer understands silver. If you want eggs or chickens or goats or whatever, You can pay in silver. Farmers will take it because they understand it. Imagine trying to get a farmer to accept Bitcoin.
Okay, so what are you watching right now? Most importantly, as we kind of wrap up, are you watching the 10-year? What's really got your primary focus? Is it what?
Yeah, probably watching the 10-year. I mean, you're just watching the yield curve, watching interest rates, because I mean, you can see if you look at a chart going back to 1982 when interest rates peaked out and started coming down. Every time, not most of the time, but every time interest rates started to go higher, they would break something. And when something breaks, it's like throwing a rock into a pond. It has ripples. It has ripple effects. So watching, knowing that interest rates are spiking at this point, I know something's going to break. I don't know exactly what it will be. If I had to guess, I would tell you it's real estate and derivatives. But derivatives are a hidden, it's like a hidden asset. I mean, you could have a default in a derivative, and unless it's declared a default, they can paper it over, and you can it's gone on. You know, they've kicked the can down the road for a long time. But if you have the real economy collapsing, I don't see this time that they can kick the can down the road. And I'm not sure they want to. Like I said, I think the plan is to come back with central bank digital currencies after the system blows up. I mean, I've heard rumors that we're going to do central bank digital currency, and they can print, another 50-60 trillion dollars, because then it's all behind the scenes. There's no way to the way it stands right now. I mean, you could look at the Fed balance sheet, and I think actually, if somebody did a calculation of the Fed balance sheet, I'll bet you, with how strongly interest rates have gone up, I will bet you that the Fed has a negative equity balance. In other words, they're insolvent, but because they have the ability to print, they can just keep printing. But that's what backs the currency.
Right. The real estate market is going to be interesting too, because as you know, so many Americans have almost their entire wealth or their unrealized wealth in their real estate, and if that's cut in a substantial way, you've got
a bigger percentage of Chinese have their wealth in real estate. So, it's devastating here. It will absolutely be devastating in China.
Yeah. So this is a global phenomenon that we're watching.
Right.
Is there anything I've missed that you think is important, Bill?
No. I think the most important thing that people get out of this is most people at this point have the feeling that there's something that's not right. Can't really put their finger on it. They can't exactly say, well, I know this, it's this or it's that, but I just know that something is not right. And I would just say, follow your intuition and prepare. Try to become as self-sufficient as possible. I mean, you're giving instances of people that, are without water. I mean, that's the most basic of basic.
Yeah, it's been amazing to watch some of these accounts. A lot of Europeans that work in Shanghai that have been doing basically a play-by-play. And some of them, hey, I'm on 3 days, no water. That's it's pretty wild to watch.
Well, the 3 days, it's 72 hours. And I've said for years and years, every day you wake up, you're only 72 hours away from anarchy, because the human body can go without food and water for 3 days. But then all of a sudden, you become hostile.
Yeah. And it seems like we're getting close to that, right? You talked about how it's amazing to watch the shortages now. And I didn't even consider the fact of the credit market hasn't blown up yet and how that would influence things. So that was very enlightening. So Bill, where can people reach you?
You can go to www.jsmindset.com, or you can contact Miles Franklin. That's where I clear my business through. Miles Franklin is one of the 23 direct dealers with the U.S. Mint.